E12.8. On January 1st of 2020, the equity section of Bergen Stores shows share capital ordinary 5 par value 1,500,000, share premium ordinary 1,000,000, and retained earnings of 1,200,000. During the year, the following treasury share transactions occurred. A. Journalized treasury share transactions. Okay, so before we start, let me just update a little bit. This is the sketch that I showed you before, right? Before, since we were only doing exercises related to ordinary shares and even preference shares, we haven't seen treasury shares before. So I'm just going to update and add the treasury shares here. So when we have treasury shares, this amount is going to be the number of shares times the original cost, and the difference is again going to be the share premium. In this case, it is going to be share premium treasury. So let's just keep that in mind. Okay, knowing that, we can actually start solving the exercise. So letter A says for us to journalize the treasury share transactions. Okay, so the first entry that we have happened on March 1st of 2020. Purchase 50,000 shares for cash at £12 per share. Okay, so here they didn't specifically said 50 treasury shares, 50,000 treasury shares, but we know that we're dealing with treasury shares, right? So since we are purchasing treasury shares, our treasury shares have to go up. And since we are buying it, then our cash has to go down. And that is just going to be, remember, the number of shares times the original cost, 50,000 times 12. That gives us 60, 100,000. The next entry that we have happened on July 1st of 2020. Sold 10,000 treasury shares for cash at 14 per share. Okay, so I actually have kind of like a cheat sketch for you to take a look, but let's just use that sketch for confirmation. Let's see if we can come up with the answers by ourselves. So first, we sold treasury shares. So since we sold, two things we know for sure, right? The first one is that our cash has to go up because we sold it. And the second thing is that our treasury shares have to go down because we will no longer have them, correct? So how much did we sell them for? We sold 10,000 for 14, which means that our cash is actually going to be 140,000, right? Now, over here, you cannot put 140,000. Why is that? Because we sold 10,000 treasury shares indeed, but we did not buy these treasury shares for 14, right? We actually bought them for 12. So the amount of treasury shares that is actually going down is going to be that number of shares times the amount that we actually paid. That's why here we say I wrote number of shares times the original cost. The original cost was 12. So we are going to have 120,000 over here. But there is a difference, right? Well, the difference is going to be deducted from the share premium treasury. In this case, we can see that we are lacking some number here in order to become 140,000. So we are going to credit it. Share premium treasury. And that is going to be the difference of 20,000. Let's check the cheat sheet for us to see. Over here, this 14, it's bigger than the cost, right? So we're looking for entries that when we sell the shares above cost. If you take a look, disposal of treasury shares above cost, we have cash treasury shares and share premium treasury, which is exactly what we have over here. From this point forward, I really recommend you to keep some T accounts for the treasury shares as much as for the share premium treasury, because you're going to need that information in the future. When you make these T accounts, you need to know if they are debit or credit balances, right? Treasury shares is a debit balance account, which means that the increases happen on the debit side and the decreases happen at the credit side. Share premium treasury, it is the opposite. So we have a minus here and a plus here. So let's fill the information for the T accounts. We know that our treasury shares went up by 6,000. So over here, we're going to put 6,000,000. And then we know that here they went down by 120. So we decrease it by 120. And we know that our share premium treasury, here we have 20,000, right? But this side actually means goes up. So it goes up by 20,000 like this. Okay, now we can continue to the entry of September 1st of 2020. Okay, so sold 8,000 treasury shares for cash at 10 per share. Okay, so let's write all of the accounts that we are sure of. We know that there is a cash and we know that there is treasury shares, right? Cash because we sold. Treasury shares because they're going down because we're selling these shares. Okay, so the cash, it is going to be the regular number, right? So it's going to be the number of shares of 8,000 times this 10, which is going to give us 80,000. The treasury shares, remember, we have to time the original cost, so it is going to be 8,000 times 12. That gives us 96,000. Okay, now you might be wondering, okay, there is a difference between 96,000 and 80,000 of 16,000, right? So we would have to include that number over here. But how come? This was the previous position, right? Well, in this case, we have to debit it because otherwise the number will be bigger, right? So, treasury. This is a weird treasury. And that is going to be the difference between these two of 16,000. Let's check the cheat sheet. This one, September 1st, we sold it for 10, right? So we actually sold it for less than the cost, below the cost. So if we take a look here, below cost, we can have two entries, right? In this case, this was the entry that we used. So that's why share premium treasury, in this case, it is debited because we sold it below the cost. Okay, that is letter A. For letter B, restate the entry for September 1st, assuming that the treasury shares were sold at 9 per share. Okay, so if we are restating the entry of September 1st, it's kind of like we're going to pretend that this entry did not exist, right? So the first thing that we need to do is make sure that our T accounts are updated. On September 1st, we debited 16,000 and we credited 96,000, right? So what we have to do is come here and erase that 16,000. Oh, actually we didn't write it, right? In theory, we would have written it here like this, but now since we're doing it, we would have to erase it. And for the treasury shares, in theory, we would have to put it over here, right? But now we would have to erase it. So in our case, I didn't write them down here, so we don't have to do these changes. Okay. So now we are actually ready to do what? To continue to make that entry of September 1st of 2020 again, right? Okay, so let's see. Assuming that the treasury shares were sold at 9 per share. Okay, so they were sold below the cost, right? One more time, let's not look at the cheat sheet for now. Let's see if we can come up with the answer. So we sold them at 9 per share. So our cash is going to be 8,000 times 9, correct? So cash goes up and treasury shares goes down. So the cash is going to be that 8,000 times 9, which gives us 72,000. And the treasury shares, that is going to be that 8,000 times the amount that we paid originally, which was 12. And that gives us 96,000. Okay, now remember that I told you that every time we have a difference, we have to take it from the share premium treasury, right? So over here, you might think, okay, I can just do this 96,000 minus this 72,000, that is 24,000, and just debit it over here and put that 24 here, right? You can actually not do that. And why is that? Because where are you taking this money from? You're taking it from the share premium treasury, right? But do you see? Do you have 24,000 here? You do not. You only have 20,000. And that is why we cannot debit the full amount from share premium treasury, because we actually don't have that. So what we can do is to take all of that money that we have. In this case, we only have 20,000. So we're going to take that 20,000 away. And now we are missing 4,000 here in order to become this 96,000, right? Where do you get this money from? Well, you cannot get from here, you cannot get from here. The other place that you can get from is from your retained earnings. And at the beginning of the exercise, they said that we have money on our beginning retained earnings, right? Over here, retained earnings of 1,200,000. Retained earnings, the signs are minus and a plus, so we actually have 1,200,000 over here. So we definitely have more than 4,000, correct? So we are also going to debit that retained earnings, the difference between the credit and the debit side. In this case, since we just debited 20,000, we are missing that extra 4,000, okay? And now let's check our cheat sheet. For this one, we sold it for 9, which means that we disposed that treasury share below the cost. Below cost, and we have that entry over here.